Hi, it's Joe Mazumdar of Exploration Insights at the PDAC edition of the Metals Investment Forum in Toronto. And with me right now, I have David Baker, CFO of Elemental Altus Royalties. David, thank you for joining me.
Thanks for having me.
So Elemental Altus Royalties, a lot of royalty companies. I guess my first question would be, what's the comparative advantage of Elemental Altus versus your peer group?
Yeah, it's a really good question, and the peer group has evolved quite a lot over the last couple of years. There's been quite a lot of consolidation in the space, not just us with the Altus merger, but we have seen I think it's 8 of the sub-billion-dollar royalty companies consolidated. We have seen different money coming in. There's a few private groups as well, but I think what really differentiates ourselves is the quality of our portfolio. So we do have long life, high quality assets with good operators. And that means that we're not just using our cash, but we have been able to use our equity quite successfully with recent acquisitions. And that then just leaves a bit more cash as firepower for future transactions, especially while the capital markets are so tough.
So how do you comparatively, what's your comparative advantage in generating new royalties?
So the BD team worked particularly hard in terms of acquiring new royalties. So we have a large team that looks at new royalties, valuation, come to a view on what they're worth, and make sure that we can acquire them so it's accretive for us and then also attractive for the vendor. And then the question is, how do we acquire them? Is it just cash? Is it a composition of deferred cash, or is it or some equity as well? But yeah, that's really led by our BD team to identify new royalties.
And so I guess what's pronounced is when you look at your deck is the growth in revenue. How do you, the revenue growth is quite significant.
Absolutely, yeah. So we expect 2023 to be our 6th consecutive year of revenue growth since inception in 2017. Top end of guidance is $17.7 million of revenue. I'm very confident that we can get towards that number. And then that's just last year. I think we're getting increased growth looking forward in 2024. And really that's driven by a couple of assets on the Altus side. So Bonacro.
Caserones?
Yes, exactly. So Caserones under new leadership there with Lundin Mining.
Right, who are more interested in exploration and expanding.
Correct.
Yeah.
And so I think that's also really interesting. I think there's also some synergies that the Lundin group might be able to lock in the region. Obviously Candelaria is not too far away. So the opportunity, it's very water constrained there. So the opportunity for desal there could be some growth. But no, really near term, Altus acquired a royalty on the Bonacro mine operated by Allied Gold from Newcrest. And so they're really now into the main pit there. So that's very quickly going to become one of our material royalties. The second really important bit of growth that we're going to see in 2024 is Altus generated the asset in Diba-La-Camfla, which is just south. Which is just south of the Sadiola pit.
That's Allied as well.
Also operated by Allied Gold. So we speak to them quite a lot, which is great, and very, very glad to see that they're successfully listed on the TSX now. So that has Diba is fully permitted, 12 kilometers south of the Sadiola main pit, and provides very compelling oxide feed. So we've ended that project to Allied for a small cash component, but what's really important is an uncapped royalty, 3%, then stepping down to 2%. Allied are guiding to first production from Diba in H1, so imminently. And so that is again going to quickly become one of our more material royalties.
Is that part of the growth for 2020?
Absolutely, yeah. So Allied have guided to first production in H1, but I think real material contributions towards the end of the year. So between Bonacro and Diba are expecting material growth.
So we see growth in revenue. How are we doing with costs? Because I know you've got some debt, so how are you managing those financing costs?
Absolutely. So again, G&A is going to be materially lower this year. We have sold all of the exploration business that came with Altus. It doesn't mean that we're going to stop that business forever, but for right now, we've put a pause on that in terms of budget. So we're going to have material G&A savings there in terms of the millions of dollars. Mm-hmm. And then what that will allow us to do is actually delever particularly quickly. So we have $30 million of debt with National Bank and CIBC that we refinanced our Sprott facility. And so that will, these cash flows that are coming into the business will allow us to materially pay down debt and reduce those interest costs as well.
Great. Thank you very much.
Cheers, Jay. Thank you very much.
All right, that's catching up with Elemental Altus Royalties here at the Metals Investment Forum at PDAC in Toronto. Thank you very much. It's Joe Mazumdar, Exploration Insights. Thanks for watching.